All right, good morning, everybody. It's Michael here. It's the 4th of January 2021. Good afternoon, good evening, wherever you are in the world, and a happy new year. I pray that 2021 is your best year yet. Um, let's hope it's better than 2020, that's for sure. Thank you to all of you who've sent me well wishes for the new year. I wish you all the same. And for those of you who've taken up the offering of the video course, thank you very much as well. I hope you find the information useful. Again, if you're just hearing about it, I announced in the last video that I was going to be offering the 7-part video course on supply and demand for more than 50% reduction in the end of last year to January 31st, 2021. So it's still open till the end of this month, after which it'll go back to the full price, but it's 250 bucks, I believe. So if you're interested in that and want to invest in yourself for the new year to ground yourself properly in the methodology, then just contact me at storehouseanalytics@gmail.com and we'll take it from there. All right, so today, as usual, we're going to go through our markets. And again, if you had any markets you wanted me to review or to look at to add to our list, we can build a watch list together. So just let me know. Just hit me up at the same email address, storehouseanalytics@gmail.com, and we'll take it from there. Okay, so let's go starting with the US dollar. The lines we have on our supply and demand market reports are still the same. Nothing's changed. So we've been looking at this level down here, which goes all the way back to 2018 into this huge congestion area, and that level so far has held. Now, bear in mind, obviously, trading volumes towards the end of the year with Christmas and even into the new year. Today will really be, I suppose, the full trading day with people coming back from the holidays and all of that. So we'll see what happens with the markets, with volumes returning to normal levels over the course of this week. But for now, we're at a level where there's a potential for a short-term bounce. Clearly, the trend is down, so any sort of bounce will need to really prove itself and start with taking out supply zones. If it's going to really prove itself, it'll have to take out these kind of levels. Ultimately, traders will probably be looking at these sorts of highs, which tags into a supply zone there as well. So for the dollar to really get people's attention as a potential basing pattern forming here, it'll probably need to get beyond these levels. It will do. It will need to get beyond these levels. So we'll see what happens over the next few days and weeks. If it does continue down, it's going to be a fairly steep fall. There isn't too much. Let's take a closer look into this area and just see what we've got. So yeah, there isn't much in the way of quality down here. So this area has already been tested, as you can see, and this is just a really big level, which is not as clear for the kind of thing we're looking for. It was tested. You can see that traders used that level for buying, so it has been tested as well. So we'll leave that there. It was a fairly shallow test given the size of the zone, so we'll leave it there and see. And then ultimately beyond that, is there anything? Then we start coming down to this goobly gook down here. Nothing really great there. So we'll reevaluate as the markets give us more information. So for now, momentum is down, trend is down on the US dollar. And you can see the monthly, I've left it on there from our last discussion at the end of the year, looking at the monthly charts, that we also have downside momentum, but we are in that big sort of monthly area. If I blow that up a bit, you can see the monthly, that sideways range again that we talked about. And we're at the bottom of the range now. We've got levels just below. So we'll see how this all pans out. This whole area is going to be interesting if we get a rally back up into here, because there are sellers up here. You can see the drive away from that level. But given where we are, going short the dollar, it's a really sort of, everyone's short the dollar right now, given the clear trend. So it may become a bit crowded. but also you don't want to be the one trying to call the absolute bottom. That's never a smart thing to do. So one to watch for sure. Looking at the Euro US, obviously the opposite to the dollar, we talked about it coming into this monthly area. It's beginning to hold in that area and still basing. You can see on the daily, it's gone through the levels we talked about in here. It's still got that extreme level up there, but the trend and the momentum remain intact for now. Nothing has changed with that. Demand zones, these seem for now to still be holding. So we'll see what happens. You can see what we talked about here. These two levels have held quite well, and they've resulted in the rally, and people continue to buy it. We are again, just like in the opposite in the dollar, we are at a level where the uptrend could potentially get into some trouble. Now, whether that's a pause in time, i.e., a sideways basing pattern, or a pullback, a correction in price, that remains to be seen. In terms of the monthly levels of demand, it would be worth keeping an eye on, obviously, this area down into here. Support and resistance traders will be looking also at this area for a potential buy to join the trend, given it's roughly about 50% of the pullback. It's the breakout to the new highs. So keeping an eye on that in terms of where the supply and demand levels are. So you can see that this area here on the daily sort of ties in roughly around that 1.19 area. So watch it. The round number is also worth keeping in mind. So there will be traders looking to join it if we get that deeper pullback. But yeah, we'll see if it bases up here and tries to continue up, or it pulls back in price. Okay, so that's the euro. Looking at the pound, so Brexit is done. The EU and Great Britain have a new relationship as of the 1st of January. So hopefully all that news risk is behind this pair, and we can see that despite all of the rhetoric about it not being done and all of that, the traders were voting with their money, and clearly everyone was of the view that it would be done because prices kept going up for the pound. It wasn't tanking. What you can see though is the volatility. Now this would have been a challenge to hold on to. I mean, look at the size of these candles in here in particular. Around Christmas time, it was just a difficult trade. So I know a lot of my guys were not, that into it. Some of them took it, some of them made these trades, but those were the ones who were a bit more experienced. I haven't traded the pound myself for several months just because I don't like that uncertainty with one piece of news coming out and causing this kind of move. It's just too rich for my taste. I'm quite conservative in that area. I tend to stay away from those volatile type of things. So we are looking at it now, and if we look above, we have levels that, let's go take a closer look at them. A couple of levels here that we might get pauses at. So the first level we'll be coming up to will be this drop base drop, and we've got that level there, and ultimately the extreme, of course. So let's keep an eye on those. Prices are continuing to rise, so we may get a pause as we get up to those levels. So that one's quite a small level. It's around the 138 round number as well. So watch it. There will be traders looking around that level. We have demand forming around here, so enough room to bounce up and down. It remains to be seen how far this goes in terms of whether we create another level here, though, given the breakout we've had above these highs that held during December. So we'll see what happens there. But for now, that is the established demand below. Okay, this is still evolving, and it may evolve into nothing ultimately. Okay. All right, so New Zealand, one of the strongest pairs, if not the strongest pair in 2020, given the way that traders have perceived their management of the coronavirus pandemic and how they've put themselves into a good position to be able to recover quicker than most other economies, they've relatively speaking, they've managed it better, and you can see the currency has been paid for that with buyers coming into it significantly. We've had a recent breakout to new highs around Christmas, but I'm struggling to find the quality demand levels below. I see this one that we've had in that's held still. I'm not that keen on that one, not at all, not on the daily time frame. On a smaller time frame, of course, there will be levels in here, but I'm not keen on this on the daily. It's just not the order flow here is too loose. It's too wide and loose. We really want the order flow to be tight so we can assume the block of orders in there is intact for us to be able to risk our funds at those levels. So for now, I don't really see anything to do per se. We'll see what forms as the price history develops. And we'll take it from there. But that's where we are on a monthly larger scale view, looking at the levels we've had drawn in. So this level has held, till now, and we've tested it roughly three times here. We still are pushing up. We have the demand below, so there is potential for a pullback. Again, it's above the breakout of all these highs, and we'll see if we can get a pullback to that, or this just bases up here and then tries to go for the higher levels. Again, nothing really to do right now as far as the way that I trade. Okay, let's go to the equities. Oh, hang on a minute. Where's my Aussie US? Or do I not look at the Aussie US? Let's take a look at that. Why not? Okay, so we'll start with the monthly view. So it's coming up into this. So this level that's been tested multiple times, it's where it's at. It's acted as a area of supply, resistance band, all of those good things. And we have traded through this one that also held. So now we've got some demand down in here. Whether we go up through this or we base here, as traders try to again sell at this area with the round numbers 80, 78 in there as well, people will be looking at those. But given the strength we've seen, given the situation in the world, obviously the trend as well, the potential for upside continuation is at this point much higher. If we start breaking down and taking out demand levels, then for sure that thesis will change immediately. We have supply above us there, and ultimately, well, actually, there isn't too much here in terms of quality, not there either. So nothing too much in terms of quality up here, but watch out for that 86, 0.86 area. So in an uptrend, we're looking for buys. Let's go take a look on the daily. So on the daily, we have the current levels of demand, which will need to be taken out for us to confirm that the sellers are beginning to exert themselves at that monthly band we just talked about. So that's the demand level they need to take out. There's another fresh level there. You can see prices tried to get to that order flow, but didn't quite make it, and the strength came back in. Let's put a line across and go take a look at what we have to the left, if we have anything of note. So this is where we're coming up into on the daily chart. Very sloppy order flow here, so I'm not keen on that one. This is also not great, but it's at an extreme, so I'm going to put that in. It's a retest of this, obviously. So that's what I've got. There's that above, but it's too far away for it to concern us right now. So it's sitting up into here, coming up against this, which, as I said, I'm not keen on the structure. But let's go take a look. It's definitely worth keeping an eye on that. And as we're coming up into it, it may be what results in the pullback that we seek. Okay, so that's the Aussie, and I'm gonna add this to the watch list there. Let's move it up. So that's the Aussie US dollar. So let's go to the equities now. As usual, we'll start with America, the market that keeps on giving, it keeps on going. Everyone's been talking about how this market is due for a fall. You know, who's to know? It's still continuing. It's still just continuing to go up. There is at this moment in time no evidence whatsoever that people are bailing out on the equities market. It's making new all-time highs and it just keeps on going. So now for levels of supply and demand, we're going to be looking at that as a potential area. For now, we still need a better move away, I think, maybe a little bit more just to clear to new highs, maybe to 37.75, and then we'll look at the pullback for that. The momentum itself is more like oops, not that one. The momentum itself is more like that. I've just left this because we had this line on from way back when we were talking about it here. But that's the current momentum, which is to the upside. The trend is to the upside, all of that. So until we see evidence of sellers coming in, every pullback is buyable. We are potentially forming some demand here, but it's not fully formed yet. Let's see what happens there. So that's America. Let's go to Australia for our Aussie friends. We are hitting into that monthly supply we talked about. It's not been as strong as the US markets, obviously. We are basing, though, at that monthly supply. So all that has happened is the buying has been equaled by the selling. What hasn't happened is the selling overtake the buying. We are at a level that we would expect to be watching for that. It just hasn't happened yet. All that has happened is demand has been equaled by supply. We've talked about these levels before. They held. Prices are still holding above it, still showing strength today, for example, in Australia. Will it break to new highs? Time will tell. We are sitting into levels of supply that we drew in from earlier, and we'll see what happens. In fact, I think I'm going to take this one out just to declutter the charts. So that's what we're dealing with at the moment. We're sitting in monthly supply and we are basing. Supply has equaled demand. We'll now see how this fight is resolved between the buyers and the sellers. Okay. So watch mode for Aussie, for the index, the Aussie index. Japan, super strong, super strong. New breakout to new highs around Christmas, the end of the year, breaking out of this range here. Demand holding, still not allowing prices to go beyond that. So you can be sure that people will be looking to buy these pullbacks to try to join this trend. For me, it's gone very far, very quick. This is really the first major basing since it broke out of these highs, and that's something I would encourage you to watch as well. So we've had the rally, long-term base broke out, having another base, now breaking out again. So it's not, if anyone was looking to buy this, you wouldn't necessarily be doing anything wrong. It's just a question of how far could it go. So we would be still going with the trend. The decision matrix we follow says this market is in an uptrend. It's in a stage 2 uptrend. We buy. We look for buys. So that's the mode we're in for Japan. There's no evidence that we should be selling right now. When that evidence appears, we'll see it on the charts. Okay, and you can see the monthly view, all-time highs. I believe there's nothing to the left. Yeah, not on this broker anyway. All-time highs, whether we get a pullback to this area that we talked about in the previous video, the breakout area, we have a rally-based rally or two rally-based rallies sitting right below that area, so very interesting setup there. So we'll see what happens with that. But for now, buying up here, it's rich, but the rules say we are allowed to. Now, as I always say, because we're allowed to do something doesn't necessarily mean we do it. I'm much more cautious, as you can hear in my voice, given the length of time this trend has moved. But who am I to say that this thing isn't going to keep on rocking upwards? Nobody, absolutely nobody. So we'll see. Um, we're still in buy mode for sure. I much prefer looking for a pullback. Let me just take a look at the weekly on that one. Yeah, so that would be a a weekly pullback. The only thing is it would be an immediate return because the markets have not accepted that imbalance fully yet. If it does come back straight away, we would like a bigger push away as well. So you can hear me convincing myself not to go long this market, but that's what we do as traders. We find evidence, preferably to convince us not to take a trade, but when the evidence is overwhelming for the trade, our decision matrix overrides that because it has inputs that we follow. So my decision matrix would not really allow me to go long, but I can understand why traders would go long. Is the point that I'm making in a very long, convoluted way. Okay. I hope that makes sense, the way that I'm thinking about it, which is the way that I critically appraise these markets before I enter. Okay, so looking at Germany. So Germany has made it to new all-time highs, I believe, is it? Yeah. So just in December poked its head above that high. Some selling did come into it, but it's hanging tight up into that area. So let's go take a look on the daily. We might as well take off this supply on the monthly. So on the daily, again, wide and loose, breaking out to new highs. This we had before. You can take a look at the previous videos. It's all in there. I don't change these lines between videos. So we are seeing some slowing though. We are seeing some slowing in the move up. So whether we base in here and then go creating a rally-based rally, if we start to pull back though and start taking out these lows, then that will be a problem. For now, again, the uptrend is continuing, albeit at a slower pace. Um, so not really, feeling that one either. And the weaker sister, as I say, you can see the volatility we talked about with the British market, the FTSE 100 poking above to new 52-week highs at the end of December. Was it new 52? No, actually it wasn't. I correct myself. These were the 52-week highs up in here. Um, but more near-term highs though. We're sitting into big supply zone. Again, the move above was sold into rather quickly and brought back down, which is a worry. The momentum seems to also be slowing, although our momentum line our most recent one continues to be up for sure. But the distance between those two highs is suspect, and the fact that selling came into it makes me wonder. Plus, the rally-based rally here removed. So it's looking like a market that's going flat at an area where we would suspect it to go flat, just around these areas of the breakout. Okay, so interesting. If the equity markets around the world were going to tank, this is one of the ones that I would be keeping an eye on for myself because it's the weaker or one of the weakest ones. So if there is a turn in the equity markets, probably um, not a good idea to be going to look to the U.S. markets, for example, for alpha, for returns because it's been the strongest or one of the strongest. Emerging markets have shown some strength recently, so China, Hong Kong, Taiwan, but ultimately the U.S. markets have been really strong. So they wouldn't be the ideal short candidates. It will be something like this if we get a turn in the equity markets. Okay. All right. That's equities done. Let's go to some commodities. So we go nat gas, natty. All right. Let me start with the monthly. Okay. So that monthly continues to show strength. We've had a little bit of a pullback. We didn't get as far as we were talking about in the last videos, but we are beginning to show strength. You can see if the wicks at the bottoms here. This market is being every time it tries to go, well sold, it gets bought into. Um, the question is now, how much strength do the buyers have to continue this potential new emerging uptrend? Ultimately, you can see the direction is still down. We are in a sideways range, but there's a problem I see with the undercutting of these lows. So you have traders who are currently trapped here who try to go short. They're trapped at this level now. So the higher this goes, the more they're going to be squeezed. And if we then ultimately go and break out, it's game over. But we'll see how this goes. Um, Looking at it on a smaller scale, we had our momentum lines. We tried to break out of it here, and I tried to go long. I think I had a position from here. I had to exit it when this happened. I believe I got stopped out on the last part of it for a small loss, which was fine. Um, it's what happens in trading. Not every trade is going to work, so that hasn't worked yet. Again, we're trying again now. It didn't quite make it to the level that I wanted though, because I've been watching it. It still didn't quite make it, so we'll see. If we are going to go higher, we're going to need to end this downside momentum, which I suppose we should upgrade that now to more like this. Oops. We should upgrade it now to say like that. That's what we're looking at. So that's what I would like to see broken, because we've made new lows, and we'll see. We have what's encouraging is the removal of this drop-based drop. Um, and now as we're pushing higher, I want to see a much more convincing move and then maybe a pullback, and we start forming the right side of this base as this thing turns, if it does turn. Um, so far, people have been using attempts to go higher as an opportunity to sell, and they've been successful in getting it to new lows. So it's one that is very suspect now. But watching it for a potential basing pattern in here, to see if anything like this happens. So it's one to watch for sure in the new year. Nat gas. Crude oil continues to push higher. We are still into that monthly, but we have our momentum to the upside. We're still going up that way. Demand levels are still holding, so uptrend, but we don't have any levels to lean on right now. Let's go take a look higher to see where we're heading into. So we've got some supply up into here, ultimately the extreme. We've traded through that, so I can take that off. But again, we're seeing a market that's basing just below these levels, which suggests that an attack is going to be launched from these bases at these levels, and whether they'll hold or not. If they do break out, let me just blow that up. If we do break out and we go higher to those levels, we may get a rally-based rally created here, in which case then any selling will have to overcome the buying that would have taken place here. But for now in CL, nothing much to do from the way that I trade. And silver, okay, full disclosure, I am in a trade in silver and in gold. As I told you guys before, I am bullish the commodities for various reasons. Most importantly, the charts, looking at them having a good year this year. So I'm in long-term positions in these. So looking at the monthly, quite haven't reached this supply zone we talked about. We've pulled back and we're rallying again. We'll see how far this goes. And on the daily, you can see the levels we marked off that area, starting where the supply was and the fall down. We've come into that level we talked about, pulled back, but now we're rallying back, which shows the strength that's been coming into silver. Silver has been outperforming gold of late. The gold-silver ratio has been falling. So we're seeing prices retesting this area again now. So we'll see if they can manage to break out of it again this time. Yeah. So we've got a basing pattern after a strong move up. You can see this is similar to what I was talking about in the I believe it was in the Nikkei, when a trend has gone so far with, basing, basing, and then we had the big pullback in that after it's gone so far, really parabolic. It went really, really parabolic. You can see if I draw that, it really went parabolic, and so we've had to take several weeks, if not months, even months to base around. Now we'll see if it has strength to go up. It still has a lot of work to do, no doubt. It still has a lot of supply to get through, but it is showing strength again, which is good. And taking it to gold. So our gold, we talked about this level. You can watch the videos. I was very, very open about not wanting this to take this level because of this supply that had formed, and you can see what happened. When prices ultimately went to that supply, people tried to sell it. The only thing was that the strength came back into it and has carried it now to new highs. But you can see how these supply zones, it's all in the videos, so it's on the channel, so it's all transparent. So you can see that level worked for a short time, but we also had this level which I preferred, and that's been working a charm. So those are the gold and the silver positions, and we continue to go. Those trades are managed, so we'll see how far they go. Gold is at a place where it will probably find some traders trying to sell it. If you look at that area, the breakdown of it came back and tried to sell it. Went above it, cracked below it's come back. So this will probably be a critical area for us to keep an eye on. For us as supply and demand traders, ultimately this area will need to be cracked. Maybe you could even draw it like that. That's the area that I'm watching for a crack. And if we do close as we are right now, we will be forming a rally-based rally, which is good. So if any pullbacks do happen, we'll have the protection of the demand levels that are forming. There's a rally-based rally there. That would have formed a new one right there. So we'll see. We'll see. Okay, so that's all I've got, guys. I'm not sure this video seemed long to me, but I hope it was useful. Thank you all for subscribing, liking the videos. I'm told it helps the algorithms on YouTube to get more eyes onto the video. So thank you for subscribing. Thank you for your likes. I really appreciate it. And let's get after it in 2021. Trade well, trade safe, and I'll speak to you again in a few days. Take care, everybody. Bye for now.